Good morning, everybody. This is Areej Hamadah. I'm Vice Chair of Cross-Border Investment in the IPBA. And this is the first panel I start here. And I feel, before I want to start our session, I would like to say thank you so much for IPBA. I'm from Kuwait, and when I become member in this organization in 2018, I feel so sad inside in my heart and weak because when I start my law firm and I have experience in the commercial and corporate, but I was shocked because our society, they didn't trust of the women in this sector. So when I start become in the IPP member, they make me, I become strong woman. They give me the trust. I have a lot of support. So I was really now different, 180%, because the support which I have here for my career, for many things. So I would like to say thank you so much for the IPBA for this amazing opportunity and the support for my career. Now excuse me, I will continue in the podium, please. Small and medium business, SMEs, play a major role in most economics, especially in development countries, because SMEs account for much of business worldwide and are important contributors. I'm sorry because my English not very well, but I'm trying to do the best to job creation and global economic development. Because of this kind of the formal SMEs contribute up to 40% of national income in emerging economies, according to World Bank estimate. 600 million jobs will be needed by 2030 to absorb the growing global workforce, which makes SME development the most important for many governments around the world. In emerging markets, most formal jobs are generated by SMEs, which creates 7 out of 10 jobs. However, access to foreign finance is a key constraint to SME growth. It's the second most stated obstacle facing SMEs to grow their business in emerging markets and developing countries. SMEs are less likely to be able to obtain bank loans than large firms. Instead, they rely on internal funds or cash from friends and family to launch and to initially run their enterprise. About half of formal SMEs don't have access to formal credit. The financing gap is even larger when micro and informal enterprises are taken into account. A key area of this session to discuss the important SMEs access to finance and find innovative solution to unlock sources of capital. We will talk about several topics: merger and acquisition in the small business sector in the GCC, and capital market and small medium business, and crowdfunding, and the traditional financing which we buy bank loans. So now we will have our speakers, amazing speakers, and thank you so much for accepting my invitation. Will be with us Paul Wynne and Caroline Berube. and Francisco Martinez. So, now you will start. Yes. Can you first start to introduce yourself?
Sure. Yeah. Thank you, Areej. Good morning, everyone. My name is Paul Wynne. I'm a partner with Hadef and Partners Dubai office, and I specialise in mergers and acquisitions. So thank you, Areej, for the kind invitation today. It's a real pleasure to be here. So, given the area I specialise in, I'm going to focus on SMEs raising funds as part of an M&A or early stage investment process. In this short presentation, we will focus on 6 key points. The 2 scenarios we are talking about when we talk of SMEs raising funds as part of the M&A or early stage investment process. The types of investors we typically see investing equity into SMEs. The principal methods or mechanics through which investors invest money into SMEs. The advantages for SMEs in raising funds through a M&A or early stage investment process. The potential disadvantages for SMEs in raising funds in such a manner. And finally, potential ways we can address some or all of these potential disadvantages. So we are talking about 2 investment scenarios in this presentation. Scenario 1 is a pure investment scenario, like a venture capital investment, where the investor injects money into the target company, which the target company can then use to pay operation expenses like salaries, bonuses, rent, as well as capital expenditure for expansion plans and growth. Scenario 2 is where the investor does 2 things. A, it injects money into the target company, like scenario 1, but it also pays consideration to the existing shareholders in the company in return for the existing shareholders selling some of their shares. This enables the existing shareholders to bank or monetize some of their shareholding. Sure. Oh, thank you. Thank you. So in the UAE and globally, we broadly see 4 types of equity investors into SMEs. As many of you will know, there is preponderance of high net worth individuals in the UAE, and we often advise such persons or their family offices in investing into SMEs. Private equity investors will typically invest in larger sized businesses, but some PE investors also invest into SMEs. Venture capital firms or funds invest in early stage companies in exchange for equity. Venture capitalists take on the risk of financing risky startups in the hopes that some of the companies they support will become successful and will be sold or IPO'd in the future for many multiples of their current value. Strategic investors are typically large corporations that invest in startups as a way to gain access to new technologies, enter into new markets, or create synergies. Unlike the other types of investors, strategic investors are not primarily motivated by medium-term financial gains. Instead, their goal is to generate strategic value for the business, which may take many forms. In relation to the mechanics of actually investing money into SMEs, we typically see this being affected in one or more of the following 4 ways. The classic way of investing in an SME is to pay cash to the target company in return for shares, so a share subscription. An investor may wish to structure its investment as a mix of debt and equity, and it may agree to provide an interest-bearing or interest-free shareholder loan. An alternative way of structuring the investment would be to take convertible loan notes in the target company that would be convertible into shares upon the occurrence of certain events, for example, an additional funding round or a sale of the company. A further method of investing funds would be to make a capital contribution into the target company. However, it would be somewhat unusual to see a third-party investor providing funds by way of a capital contribution unless there was tax reasons for doing so, as a capital contribution is essentially a gift and would not, for example, increase the investor's shareholding in the target, and would also rank lower than a shareholder loan in the event of an insolvency. So there are certain advantages for SME raising funds through an equity investment. One of the advantages of equity fundraising is that it is an alternative to bank debt. SMEs may find it difficult or unattractive to obtain bank debt given the high interest rates that are currently prevailing and which do not appear likely to drop anytime soon. Banks, of course, may be uncomfortable lending to SMEs that don't have a track record. Banks will often want personal guarantees from individual shareholders and other security like mortgages over personal property assets, which isn't ideal. Certain investors, of course, may bring value to the target company. Private equity or venture capital investors may have the skills and contacts to effect a larger exit for all shareholders in the future. A strategic investor may have the ability to grow the business through its own business, for example, by enabling raw materials to be purchased in greater bulk at a lower price from suppliers. Another potential advantage is that where funds are raised as part of the M&A process, the existing shareholders have certainty that they have at least realised some value from the business they have built. So the existing shareholders will have the comfort that they have banked some of their shares and hard work, particularly if there may be a downturn in the economy in the future and less investment interest in the sector of the SME in question. And finally, there are typically limited regular repayment obligations, and the SME does not have the inconvenience and expense of having to pay back principal and interest every month. So that's obviously appealing from a financial and commercial perspective. So, notwithstanding these advantages, there are, however, certain disadvantages to SMEs raising funds by way of an equity investment. Firstly, there is a real possibility that the relationship between the existing shareholders and the investor will break down, and we have seen many instances of this in practice. Secondly, once the investor invests, there will be limited opportunity for the SME or the existing shareholder to change the terms of the investment, as these will generally be locked into a shareholders agreement. Thirdly, assuming the investor acquires shares as part of the investment, the existing shareholders will take a smaller percentage of the sale proceeds upon an eventual exit. And fourthly, the existing shareholders will inevitably lose a certain amount of control over the business. So to finish on a positive note, however, there are ways of tackling these potential disadvantages up front at the outset of the investment. These include entering into a clearly drafted shareholders agreement with robust exit mechanisms, including deadlock provisions, legislation for what happens in the event of a deadlock on a material issue between the shareholders, call options enabling one shareholder to buy out another in certain circumstances, put options enabling one shareholder to force another shareholder to buy its shares in certain circumstances, drag-along rights entitling a shareholder to force another shareholder to sell its shares as part of a wider sale of the company to a third-party purchaser, tag-along rights entitling a minority shareholder to sell its shares to a third party which the majority shareholder has agreed to sell its shares. A well thought out corporate structure is particularly important in the UAE, where the enforceability of some of these provisions I've just mentioned will depend on where exactly in the UAE the relevant company is incorporated. These types of provisions that I just mentioned are generally enforceable in respect to shares in companies incorporated in one of the UAE's financial free zones, like the DIFC or ADGM, for example. But there's a question mark over the enforceability of such provisions with respect to onshore companies. A clear authority matrix at the outset of the investment as well will also avoid disputes over who can sign what document, and will also avoid the management shareholder from being hamstrung from an operational perspective by the investor exercising too much sort of control. Basically, with that, thank you very much for your attention, and I'll pass it back to Caroline.
Thank you very much.
Good morning, everyone.
Good morning.
Very happy to be here this morning. Thank you, Areej, to invite us to speak to this session. Always happy to see everyone back in person. I'm a big fan of IPBA. I've been involved since 2007, so it's great to see everyone again. I'm Caroline. I used to be past Secretary General of the IPBA, chair of the publication committee, but beside that, I'm Canadian, French-Canadian from Quebec City. I've moved to Asia 25 years ago, so I've had a long journey in Asia, and the topic was very attractive to me today for two reasons, talking about SMEs. I'm in the fourth generation of entrepreneurs, so I had my grandfather, my father, myself, and even my son, who's 17 years old, has already a business. So the topic of SME is fascinating to me, and also to talk about Asia and maybe share a little bit about what's going on about SME and fundraising in that part of the world. So very happy to share a little bit about this. I did have a presentation. And as a typical entrepreneur, I'm like, you know what, on my way here, I'm like, maybe I won't do the presentation, I'm just gonna go with the flow and have my structure, but not have a PowerPoint to rely on. So if you want the PowerPoint, I'm happy to share it later, but otherwise, I'm just gonna have 4 topics I would like to discuss today. First, the definition of SMEs. I have a few friends here, are from different countries. The definition of SMEs is quite different, right, from one country to another one. If we speak to German people, they're going to say SMEs, sometimes it's a 1 billion euro company. Coming from Canada, your SME is not a 1 billion euro company. It's a 10 million, 50 million, max 100 million Canadian dollar turnover company. So there's different ways to define SMEs, either based on turnover, based on number of employees. So I was doing a little bit of homework before, and I was checking what is the definition for the 3 markets that I'm usually involved. The 3 markets are Canada, Singapore, and China. So I said that I've been in Asia for 25 years. Most of my career has been focusing on China. So I used to be in Guangzhou before COVID. I've been in Singapore since then, moving back to Guangzhou in April again. But the definition of SMEs is quite different. So if you look at, in Canada, like it's below 100 million Canadian dollar, less than 200 employees. If you look at Singapore, it's also 100,000 Singapore dollar, which is about the same currency value than Canadian dollar, and 500 employees. And for China, again, the range is a bit wider. In terms of composition of these countries and of SMEs, China has about 97% of their economy based on SMEs, which is a high number. Singapore, 99%. And Canada, 99.8% of the economy is based on SMEs. So SMEs are clearly important, right? We need them to, as Areej mentioned, to keep the economy going in these countries. So the market has changed, for SMEs with COVID, of course. A lot of Canadian companies, they do need to come to Asia, for example, to either reduce their costs to survive, or either to, tap a new market. In Asia, we needed to adapt. As a lot of you know, there was a lot of restriction. We couldn't travel within countries. Even within China, we couldn't go from one province to another one. So how does it impact SMEs? It had a huge impact on logistics. I talked a bit earlier about entrepreneurship. So I do have a factory with my brother in China, and COVID impacted us badly. We still grow at 25% per year, but still we had the clients didn't want to take containers, so the container price went from $5,000 to $25,000. So at some point we had in our warehouse about 300 to 400 containers that clients didn't want to take ownership. They didn't want us to ship them. They were saying we're gonna wait. So what happened to SME? And I say SME, we're SME, 30 million US turnover, 300 employees. This is the typical SME concept. So what do people like us do and did, right? So we needed to get rid of the containers. We needed to transfer the ownership from a legal perspective to the client. We didn't want to have to take insurance to finance our clients' containers. So we had to be very creative. I'm sure it was the same for all other SME owners. So you really have to be very, very creative, and COVID did affect us. One thing which was amazing though, from a China perspective, and I love this story, COVID shut down most factories in March 2020, and then we could reopen. But how do we reopen a factory in China? Then we needed to have quota to show how many masks we had, get a bunch of approval from the government. In many countries, the employees would have said, let's wait a little bit, let's wait until May, June, because anyway, people were continuing to be paid. But in China, I had never seen a team of employees so keen to go to the government and try to get approval, try to get masks. And I'm sure you all remember the cost of the mask was going up in March 2020. It was expensive, but our employees were so keen to get the approval, which was so beautiful to see. Instead of wanting to stay home and say, hey, we're gonna get paid by not doing much, they had this hunger to start the business again and make sure we could keep our clients happy and deliver the product. So this was fascinating, and it just reminded me of the beauty of Asia. People were so hungry to go back to work and learn and carry on business. So all companies had to adapt. A few countries had to put a few measures in place to help SMEs. For example, in China, the government decided to offer 3 months rental for some businesses that were in factories or in special zone for free. So it was helping the cash flow of these SMEs, which was useful. In Singapore, what the government did, they were subsidizing salaries. So they were giving you a refund. So you were paying your employee, but the government was giving you a refund, a few months after. So each government, I feel have been trying to help, which was interesting and useful. Then a last thing that happened during COVID, and again, many things happened, but I could be here all day about this. As you may know, China shut down, Hong Kong shut down. A lot of people had cash flow and they wanted to get their cash flow out. So a lot of companies and wealthy family in Asia decided to move to Singapore. Why would you move to Singapore, right? It's a stable economy. It's safe from a banking perspective. Currency is very stable. Legal system is very stable. So what has been interesting in terms of, for example, family office, we had 500 family office in 2020. By the end of 2022, we had 1,500. So a lot of cash flow has been moving from Asia and other parts of the world to Singapore. And why I'm bringing this topic, because it does have an impact on financing SMEs. So this is going to be my third topic. Like SMEs need cash flow, as you may know, to grow. And there's different ways. And as Paul mentioned, there's different ways through acquisition, by loan, and there's also the organic way. For example, in our factory, we have decided to grow organically. We never got loan, we never had angel investor. We wanted to grow maybe at a slower pace, but we wanted to grow organically to reduce the risk, which is also what Paul mentioned, because once you have investors, of course, you have to have more accountability, compliance aspect. And coming from a background of entrepreneur, which is always like a roller coaster of life, my dad had a lot of investors and it always went sour. So because of that, we decided we would be very safe and we would grow organically. So what other SMEs do in China and where do they get their funding? First, we have a lot of angel investor. For those who live in Asia, there's a lot of expat that have wealth and decide to help a lot of their friends, which is always good, but the issue we have when these happen, they always come to see us lawyers after the fact, right? Once they have invested like $500,000 in their friend's business, they trusted their friends, and then all of a sudden the business collapses, not existing anymore. And I would say this is happening quite often, and it happened before COVID, and it's happening more. In Singapore, for example, a lot of people, as I mentioned, moved to Singapore with lots of cash flow. 2020, 2021, people were very reluctant to invest. So venture capitalists, angel investors were keeping their cash close to their chest. They didn't want to take any risk. 2022, people decide to invest. They say, the world is reopening again. We want to have a quick return. Let's invest. So angel investors are quite common in Singapore. And the issue we usually have, they do it informally. Sometimes they send the money, not in the bank account of the company, they send it in the bank account of their friends, for example. Then tracking fund is complicated. And as any entrepreneur, and I can understand it quite well, even if I'm a trained lawyer, you're excited, you grow the business, you're hungry to get new sales, you have management issues, sometimes you need to hire new people, having to do a shareholder agreement or an investment agreement, it's usually the last thing you're gonna do. And if you're SME as well, you usually don't have the money to hire a lawyer, right? You hire them after, when you're in trouble. So the due diligence is never really done. I feel when it's done by angel investor, they just rely and trust their friend or contact of their friend and say, listen, we're gonna invest cash and hopefully the business will grow. In fact, yesterday I was with one of the business that do protein food business or research and development. It's a growing business. They just grew their business, which is now about $75 million with angel investors. So friends of friends from different organizations. And now they're at the stage that they need to put it on paper. They need to make sure that people who invested are reflected in the book, and they're reflected with the authorities. For example, in Singapore, as some of you know, I don't know if we have anyone in Singapore, from Singapore here, but it's a very square compliance country. So if you have shareholders, they need to be listed on ACRA, for example. The process is done pretty quickly. As soon as you have the passport of the person, residential place of that person, of that shareholder, it's easy to do it. It can be done within 24 hours. But a lot of time with angel investor, you don't get to that stage. So then they call us and they say, well, I invest $500,000, my money is no longer there. And I want to exit, I want to sell back my share, and I'm like, well, you're not reflected on ACRA. This is an issue, right? If you're not reflected on the book, it's just basically correspondence and the money was transferred there and there. So very important for angel investors to do their homework and do it at the early stage. We had a client, they're in the tech business, and we knew they were growing, we knew they had a lot of angel investors, but at some point we realized they had sometimes about 110 shareholders. Then I look at their ACRA, which is the local authority, governmental base in Singapore, and I'm like, well, you just have 2 shareholders. What happened to all the other shareholders? And then trying to go back 3 years down, it's very complicated, messy, and expensive. So my advice for SMEs who take angel investor is to do your homework right at the beginning. And one thing I believe is important is to educate our SMEs. And it's to tell them right at the beginning, put a process in place. You have a new shareholder coming on board, you have to tell them, listen, I need this document, you send it to my lawyer, then we update, ACRA, for example. Again, for Singapore, it's quite easy, right? You become on the ACRA report, like, within 24 hours once you have the document and the filing is done. In China, just to add a shareholders can take 2 to 3 months. So if you want to add 100 shareholders in China, be ready. It's going to be a very time-consuming process, and the authorities need to approve everything. They need to vet it, and you have to do it in a few authorities. So it's not only one AIC that you have to contact. You have to go through the process. So super important to do it as time comes. Another thing that came during COVID, in fact, in early 2020 for Singapore, for venture capitalists, was a new vehicle called variable capital company. So the government put this in place because it allowed, it's the same concept as a private limited company, but once you have set up this private limited company, you can return your investment. It doesn't have to be only from the profits. You can return it from your capital. You can return to investors very quickly without a process, compared to a company, a limited liability company. So the government has been adapting, and they put new vehicle, and they say now there's about 3.4 trillion worth of assets with the VCC in Singapore. So if we talk about 3.4 trillion Singapore dollar, we're talking about 2.7 trillion US dollar. So lots of cash flow is there and available. So a lot of companies who had cash flow decided to set up this vehicle, so this has increased and it has helped many SMEs to grow their business. Another one that has increased, as I mentioned earlier, is the family office. We went from 500 to 1,500 at the end of 2022. The advantage of family office, and I'm sure all of you know family office concept, it's more flexible, it's usually one family that has a lot of money. It's a good way to track record for your investing. So this is also the big trend in Singapore right now, especially because of Hong Kong and China, which have had so many restrictions. Again, the industry that I see, family office investing, are usually in F&B in Asia, especially because the middle class is increasing, so they want to invest in a growing market. Hospitality and retail, so this has been the trend that I have seen. Another one that I would like to mention that we can see from time to time, especially right now, investing in SMEs, is government funds. And again, I'm going to celebrate Canada. Right now, we had a big Canadian Asia conference 2 weeks ago, and I'm the president of the Canadian Chamber of Commerce, so I'm quite involved in that. But for example, the Canadian government has put 74 million Canadian dollars now for Canadian companies who want to grow to Asia. So it's a lot of money. It's about 60 million US. So how are they going to do it? Now it's all the question, is it going to be by loan? Is it going to be by grant? So there's a lot of questions going up, and Canada is not the only countries looking at investing in SMEs overseas in Asia. There's a few other governments, but this one I know it quite well. So it's interesting to see what will be the trend. And finally, traditional banking. As I mentioned, I've been in Asia for a long time. I was in China in early 2000. I was working on non-performing loans. There was a lot of them. So getting a loan in China for SMEs is very, very challenging. You have to go through a huge process. So I would say most companies, most SMEs don't grow their business with loan from banks. And the banks are very reluctant, especially because of the issues they had in early 2000. While in Singapore, if you're SMEs, the local bank, there's DBS, UOB, and a few OCBC, there are a few other banks, they're very keen. So if you're a small SMEs companies, they're very keen, and very quickly they're gonna offer you small loan. I'm not talking about a 5 million US loan, but they're gonna give you a $500,000 Singapore dollar loan very quickly. So this is usually good, especially if you're a startup. What the government has also done in Singapore, there's a few government entities, and they set up incubator companies where they really do help SMEs to get funding through grant from the Singapore government. So if you're in a very niche business, I mentioned earlier the vegetable, veggie protein company, they do get grant from the local government, for example, because it's something that the government believes. So this is happening from the Asia scene. And now, why would local and international investors be interested in investing in SMEs in Asia? Well, as I mentioned earlier, it's either because they do need to go in these markets, you can get new share of markets. The middle class is growing. It's one of the biggest growing population in the world. by 2030. So there's a lot of potential business. Also, like, you know, if you invest in an SME in Singapore, there's a lot of corporate governance, which sometimes can be painful, but at the same time, if you do invest in these type of companies, like, you know, like you can be reassured that the government is backing you up, because there's a lot of filing that has to be done annually. You need to have a local director. If you don't do filing, you have a penalty, you have fine, you can have criminal proceedings against you. So they really keep you on your toes as an SME, so it reassures you if you're going to invest in an SME in Singapore. And there's consistent regulation. And of course, the enforcement court system is very transparent. I'm an arbitrator with CITAC in China, and it's one of the good arbitration for China. Local courts in China are a little bit sometimes slower, and everything will be in Chinese, while in Singapore, for example, everything will be in English. So it's a lot easier if you want to sue, like, you know, like the company that you have invested in. It's usually faster, and you can be almost reassured that there'll be a very neutral procedure for you. That's all I have to say. If you have any question after, I'll be happy to answer. Thank you.
Thank you very much. Thank you very much. You know, I start my business in China now, small business. I established my company, so I hope And now we will start with Mr. Francisco.
Thank you.
Thank you.
Nice
to meet you.
Okay, you can hear me well, okay, yeah. Thank you. I mean, thank you, Areej, because she's been the organizer, the coordinator, and she's put a strength, consistency, she's chased us, not in an aggressive way, but in a very nice way. And so we are extremely grateful of Areej that even last year that we couldn't have the IPBA celebrated, we had already a session going on, and afterwards, with that, I think that Areej is a symbol of the consistency, of the strength of women. So this is the way to go. So thank you.
Thank you so much. Thank you.
And then my colleagues, they did just perfect. Paul, from his Irish angle, precise, clear, and also very solid. And Caroline with this, also very, very much warmer, closer, and more intimate. So I think that the references are very high, and I don't know what I will be able to do, but I will stick to the script because I have this. Let's check how it goes. I mean, I'm going to talk about. It's something I like, even if I don't know if it's working. Not yet. It should be.
Excuse me. It's not working.
So I take the chance also to introduce myself very quickly. I'm a Spanish lawyer, which is a bit exotic. I'm a corporate lawyer, which is not so exotic, because we are here, most of us, we are corporate lawyers, and as I was discussing with Paul yesterday, corporate lawyers, we are resourceful people. We don't know much about things, because normally the experts protect us, but we are people that have solutions for everything, and we make the dreams come true. So that's a part which is good of corporate lawyers. And I've been linked to the IPBA since 2014 in Vancouver, because I was sent by my firm to head our office in Beijing, probably for bad behavior. But I did it well. I was 4 years there, and it was a wonderful opportunity. It was a very challenging experience, not only professionally, but also personally. And that's why I got familiar with Asia. I had the chance to travel. I had the chance to attend to the IPBA conferences, and I really enjoyed the IPBA. It's true that sometimes we can say that the competitors, the IBA might be a bit more select. I mean, there's always an IBA mafia. Some of our party always goes to the IBA, and we can't get into that corral, okay? But I think that the IPBA is like more closer, it's more human, and it's more enjoyable, I have to say. It's less stiff. So I think those are also features that make the IPBA very special. So after this, we'll focus on alternative financing. I mean, even if banks are my client, I have to say that I enjoy that sometimes banks don't get on their way as they used to do. And so here we have situations, especially around the topic of small and medium enterprises and SMEs, that obviously, as you know, there is no romance without finance, as the old song of Charlie Parker. So we do need financing, and we need financing which has to be adapted to the circumstances of the small and medium enterprises, which are very specific, as Paul and Caroline have mentioned before. So here, this is Paul's presentation. That's why it is familiar to me. Yes. And now, stop again. My presentation is no, thank you. Let's see what, in any case, I will start and afterwards I have the help of the, you have there the slides. It comes back, Paul, you have a very resilient presentation. And very dominant, I have to say. But, so, small and medium enterprises, as we mentioned before, they play a major role in the economy. It is true that the big multinationals, etc., the big corporates are very relevant, but the small and medium, it's really the blood of our economical system, not only in Asia, also in Europe and everywhere. It's people that work hard, and you know that big companies have always been before small and medium enterprises, so we have to have an eye on them, and we have to adapt on how they behave. In the last years, it has become more and more difficult for these type of companies to get financing. It is true that traditionally banks were the ones that provide for the financing, but things are changing, and you cannot rely only in banks to get that input, which is so essential for the company's development, which is money. Okay. Instead, there is alternative lending, which is the category, and afterwards we'll see the different types of alternative lending. We will focus on direct lending and crowdfunding, but there are other types of alternative lending that are worth considering. And they become much more attractive than banks. Banks, they are more and more serious, as you know. They are more and more strict on regulations. They are more and more conservative. Certain of them, or most of them, they have to have like the reserves and certain obligations. I mean, because after the financial crisis, regulation on banks has become much harder. Okay, so now alternative lending or financing, it's on its rise, and because banks will not do everything. I mean, even if there were certain banks which were linked to small and medium enterprises. And after the pandemic situation, this circumstance has even got more relevant. So the thing is that I would like to have my presentation, Areej. Yeah, because it's not. This is. Okay, because I want to show you certain. So let's start with what is the concept of alternative financing. The concept is pretty easy because alternative financing. Hello? You will help me?
We don't have it.
No, I sent it to you.
We don't have it on the Dropbox.
I know?
We sent it.
Yeah, I didn't give it. Yeah.
We sent it all. Can you send it back so we can
Again?
In any case, the fact is that any financing which is outside of the traditional banking, let's say, institutions. This is a very broad definition, but it shows you that alternative financing or lending is outside the banking. It is true that certain banks do certain products that could be considered as alternative financing, but on the whole, it's those mechanisms of lending which are not within the bank's activities. And this type of financing, in general, they are more and more accessible than banks, and also they allow that the process of lending becomes much more flexible. They don't ask as many requirements, sometimes formal requirements, in order to facilitate the access to financing to SMEs. Then, this is linked to the fact that this provides greater flexibility to get the money, and especially as we will see in certain situations that money is needed probably in an urgent way, it could be a mechanism which will be much more efficient than the traditional banking system. And it is true that alternative financing so far, they have a drawback that we will see afterwards, that normally it implies higher yields, so you pay more for the money. But I think that the tendency is that now with the raise of interest rates and this new situation, which has changed the scenario in which we've lived for the last, let's say, 15 years, they are becoming alternative financing more competitive in that precise aspect with banks. I mean, the differences are decreasing. And so, normally, this alternative financing in general could be used when, as I said, there would be an urgent need of money, and you will need, for whatever reason that could affect the small and medium enterprise, that there's been a fire in the factory, or also when there are shortages of supplier, and you need to cope with this to get or to pay more for the inputs of the production or in the factory process. So this will refer to financing between actually 5 to around 50 million to 5 to 50,000 to $5 million will be more or less the figures in which the alternative financing is focused. And normally the maturity will be here it is, will be like probably, I'm saying the standard or the current practice in the market, it will be 5 years. And they cover sectors or economical sectors which are often disregarded by the banks, and like software or new activity or economical activity that are now actually starting to be more relevant. And as a result of this, we can say that alternative financing is becoming more and more an option. Here we can see the types of alternative financing, lending, and as I said, I will focus on direct lending and afterwards on crowdfunding, but we have these four, let's say, situations of four types of alternative financing lending. You have the venture debt, and afterwards we'll focus on every one of them, but especially on direct lending. Venture debt, the structured equity products, the debt financing, the non-dilutive funding, or not affecting the equity, and finally direct lending and crowdfunding, which is also the last type with certain particularities. So let's focus on venture debt. Who does this type of financing? It's the business development companies, which together with private equity firms and hedge funds may provide this type of lending, the venture debt. It's typically used or specifically used to finance certain business opportunities that happen on the road, and so when it's an opportunity you need to be fast, or also for specific projects. So that will be the typical, it's much like the initiative that will be a bit linked to venture capital. It can actually, the forms that the capital can be provided this is even certain already consolidated companies such as Uber or Airbnb, they use the venture debt for certain specific projects or for when they try to plant themselves in certain jurisdictions. So this is, and we cannot consider Uber as a small and medium enterprise, but they use this mechanism. Okay, this capital has different destinations. It can be provided for growth, and in general the cost is much lower than it would be in the bank, and probably the banks will not be interested because in those situations there might be that the company has not enough track record. And sometimes we can discard this type of venture debt when the company's finances are not as solid or as clear as they should be, and it could be considered as a lien to senior debt. Okay? So that's something that we should have in mind. Then the structured equity products also, they are offered specifically by alternative funding or lending companies, also such as business development companies, or in this case, certain big individual investors that could be interested and that operate in the market. The good thing about structured equity products is that they offer funding to businesses, to flexible funding that does not affect the business equity of the owner. So it normally implies a higher rate of interest, but sometimes also it could imply at a certain stage, by ways of convertible mechanisms, it could become also equity. Okay? This structure, capital equity product created by this type of business development companies, is what we call a prepared investment option that normally involves that the issuance of securities and of the company. It also may involve other type of products alongside, which also have like securities, which has stocks, issued stocks, commodities, bonds, etc., which are linked to the fact of a possible link to the equity indexes of the company. Okay, so it's more financial product in the case of the structured equity products. Debt financing, we have here like 4, let's say, alternatives for debt financing, and the 4 of them are self-explaining. We have the non-bank cash flow lending, which is also given by business development companies that actually offer cash flow for potential growth of the company, and this it is normally aimed to acquire certain tangible assets, such sometimes as a real estate, etc., which is probably the reason for the financing. Afterwards, there is the recurring revenue lending, which is for those companies that work on subscription basis, like certain edition companies, or so that in a way the guarantee will be the high levels of customer loyalty, and that's why the lending is given under this form. The home equity loans, which also they are not so much as a mortgage, but if you already have a home, this can become like the asset that guarantees the lending without the need, as I said, of a mortgage sometimes, because the alternative financing is more flexible and the requirements of guarantees are lower. And then the debenture, which mainly this is based also on the reputation of the company and actually on the ranking of the company, of what the SME could rank. So we move to the last form before the lending of alternative lending, which is the non-dilutive funding, which is also called non-intrusive in the capital funding. And one of the main features, or the main features of this type of alternative lending, is that it does not require that the owner of the business gives or allows to step in the equity of the business. So it is probably interesting for small and for companies which have just started and that have a lot of potential in terms of research and development. And this is also sometimes backed by the government to encourage precisely business. And we have an example of this, which is the paycheck protection in the US program, which allowed the federal government was backing this, and no fees were charged for this type of loans, and actually they were forgiven in the end, and this was related to the COVID crisis, when the 60% of the amount lent was afterwards used to pay the employees and was used for the payroll of the company. So it's a sort of package that allowed certain companies to get that financing. Now we focused on direct lending, okay, which is here you have the players and the different elements of this and the destination of this. which commercially, as I mentioned, in this situation, the bank will not be the only and sole money providers in the system. You find this direct lending, which makes it much more agile and which make it probably more suitable for small and medium enterprises, at least for amounts of up to five and even further quantities. Okay, so this is, as you say, institutional investors. There are people, specialists, professionals, which are those that manage the assets. And finally, the destination can be diverse and multiple. It could go from operations of merger to transform or restructure the company. It could be that the company expands internationally or within its own market. It could be recapitalization or restructuring to get the financial structure of the company more solid. It could be to get rid of certain shareholders, a mandatory buyout, and also increase leverage when needed. Okay, so I will talk about a little bit the market situation now and the elements that are pretty typical of the direct lending. The period for disposal, this is all related to disposal, and these are features that are, as I said, applicable to most of the direct lenders, at least at this moment. It is actually longer than required by banks. It's 10 to 12 working days, because you really need to make a capital call to have the money. So once that the financing, the direct lending has been closed, it gets a bit more of time to get the money. And there are certain undertakings. Obviously, if afterwards there is a failure of disposal, that implies a penalty for the borrower. The amount disposed normally is the total amount committed is disposed at the same time, and there will be normally the flow of funds from the fund to whatever third parties which have been related to the transaction, such as lawyers, advisors, etc. And the delivery of the disposal normally is a single delivery in the market, but it is true that it would happen that there would be several successive disposals which may be connected, according to my experience, to certain milestones in whatever project or whatever is what is financed by the direct lending. So in that case, sometimes you have a mechanism to have the money protected while those milestones are reached. That can be a notarial deposit or bank deposit, and you have to provide for certain evidence that the milestones have been reached. And then there is the commission or the fee for this, which is charged actually before the original disposal of the money, and the company that does the direct lending gets the commission. So important thing is the interest, that it works, I mean, any financing, but it is sometimes higher, and I say that this is changing, and as we know, the money is getting more and more expensive, so there is always a reference of Euribor or whatever index it can be used, and then normally market-wise with 4 to 5%, 4.25% as an interest rate. And there are different also situations, as you can see here in the presentation, for like bridge loans and the ratchet and how it implies, and this more or less this data which is market practice right now. The different private debt strategies, I mean, this is also like normal loans. We have the senior loan with the liens, the junior loan, and the mezzanine, which, as you know, is a neat hybrid of both, and it combines different type of maturities, and obviously some of them, like the mezzanine, is subordinated to senior loan. But this is also applies to any financing. And so in the end, as a conclusion, we could say that I will start with the drawbacks, which is, as I said, the high yield, and the fact that the funds that lend this money, they are not able to provide facilities and ancillaries sometimes. But the advantages of this type of direct lending, they are, as you can see, they have access to, which are clear and probably more straightforward bullet structures. there is more flexibility, there is access to debt across the capital structure, which is also, I think, an advantage. It implies that the execution normally is much more quick than the banking system. It could be also expand to higher, bigger size of loans, and also the assets of the company are actually also monitored by the fund, and so I think that helps also to the success of the transaction. Here you are in the market, you have the situation of to use direct lending. Here we have the different that I mentioned before, and I don't want, because at least we need 10 minutes to discuss, I guess, but we have this, as I mentioned before, private equity, all the advantages that they are connected to these situations of when the direct lending is used. So these are normally the players now, Berube Capital, GSO, all other investment bankers, they developed a division for direct lending like JP Morgan. And in the end, and this shows a little bit how it's been going, as you see, it increased substantially while the banks were knocked out during the pandemic, okay? Now it's decreased, but as you see, it's focused in the Western world, especially North America and Europe. So I guess that potentially in other parts of the world such as Asia, Dubai, etc., I think that there is room for improvement and for more use of this type of alternative financing. So crowdfunding, which is, mainly, and I don't want to use all the time, but I think it's crowdfunding. We all know. The biggest element is that this is like popular capitalism. And it's very useful for new projects, and this is the coordination of the combination of going to the online community. So obviously the risk is normally reduced, and obviously you have an access to the online community, and you have also not only an access but also the feedback that you can really analyze the type of customers that are happy to go through crowdfunding. We all know what crowdfunding is. So these are the types of crowdfunding that are mainly used, which are, one is a reward-based crowdfunding. Okay, there is a reward once that the money is given back, and sometimes, obviously, the higher the risk is, the reward is higher also. There is a lending base, which is more, let's say, parallel to traditional lending. The equity-based crowdfunding, that in the end, once the money is through the online platform is brought, you can become shareholder of the company at a certain stage, and then donation-based crowdfunding, which normally has certain tax incentives. These are the elements of crowdfunding. There is the entrepreneur, the platform, which is the mechanism through which the money gets for the targeted investment, and then the public, the crowd, and so that would be the elements. And then mainly the source of financing are equity and lending. And here are all the players of the crowdfunding. Here you have certain platforms which are specialized on this type of projects. And finally, we have also what influenced the entrepreneur and why this could be a mechanism. So in the end, we also have here the advantages and the disadvantages of crowdfunding. One disadvantage is that it can be used for money laundering. It can be affected by cybersecurity impacts, and then the funds, it could be projects that are maybe inflated and they don't have enough transparency. But it is true that the cost is very low. It works for this type of very new projects, where also the fact that you can lose a lot of money. It has also probably social impact for certain type of investments that would not be possible without this mechanism of crowdfunding. And the consumers also have certain visibility. And I think that with this, at least we could have, I invite you to raise your hands and ask whoever you want about what we've said, or maybe we can start a discussion. Okay. Thank you.
Thank you very much. I would like to ask you about the crowdfunding, because in Kuwait now they are looking forward to start this time. But as you say, it's a risk because there's for money laundering and also the fund. And this is what happened in China, but I think they closed it now, they stopped.
Yes.
Because there's money, it was placed for money laundering and for fund. So there's any other country also they are looking forward to close it?
No. I mean, I think that crowdfunding is very interesting, and there are mechanisms to precisely avoid the money laundering circumstance. If you really set up a scheme that there is a sort of project that what you're actually doing is actually money laundering, that would be something that could be chased by the authorities. So it has to be projects which in the end have are reasonably, and I know that these projects have an element of high risk, but there are serious people that are managing them. And that's why the companies that provide with a platform for projects normally they have to do certain effort to identify that the projects that they are going to be financed are at least are real projects, and not the scheme made up to put money and cover it. Yeah. But not in the worst. In the worst, I don't think they will be affected. There will be more control, but no, they will be not.
Thank you very much. Any question? No?
No?
No.
Thank you. Because normally when you ask for questions, people don't speak.
No, seed funding. This is different than crowdfunding. They call it seed funding.
It's different. They have elements which are seed is the initial funding where you have like an idea and you look for friends, family, and probably crazy people. Those are the type of that will be the seed. That it's very initial, and afterwards you go through this process of different rounds of financing to get. For as an example, I just have a matter with software app for. Which is at a very initial stage related to hospitality, to bringing food to your place, etc. And it has certain very new elements, okay? So initially we are talking about an investment of 50,000 euros, but now we are going to do the financing rounds, and these rounds, what they allow you is what you have to pre-money situation and how this is going to become and how you value how much once it grows. Your shares are going to be. So seed is a very initial one, that's why it's called seed. And there are certain also institutions that actually protect those, because in the end, everyone is looking for a mythical animal, which is the unicorn. And there are certain very small companies that started like seed, and afterwards now they are listed in New York or wherever. So that the fact is that the seed is just that beginning, and normally it's done through rounds. Sometimes you may use crowdfunding as a mechanism to get the finance when no one wants. If you don't have friends, you don't have family, and you don't have crazy people, then you may use crowdfunding.
Yeah, I said that because I've also been approached by a law firm, a US law firm. They had a case related to seed funding, but they were talking about quite a big number. I think around equivalent to around 70 million dirhams. It's like maybe around 20,000, US, 20 million US, So that's what I'm a little bit confused when you said seed funding is very for very little, the capital. But those guys were talking about a bigger amount. And they were reminded, because frankly, that was the first time I come across seed funding, as a kid, And they were, by the way, very stingy with fees. I said, you paid a lot of money, for it. That's all done, and we have to follow it. We need to get more fees for that. But they did not agree, so we did not continue.
Yeah, obviously, America everything is big, okay? And obviously, if that initial seed is $70 million, I think that we can have some testing fees.
Okay.
But is it only 50,000?
Thank you very much.
I want to ask you a question. Is there here in the world a specialized market for the acquisition and merger as an article and law or no?
Pardon, Areej?
If there is any specialized market or by law or article regarding the acquisition and merger for the SMEs or no?
No, not really. No, there's no kind of specific
There is no.
law that govern.
I feel happy now because I give to the Parliament a new law about this kind of market, and I hope we can see it, inshallah.
Yeah, sure.
And I want to ask you, Carly, what about the best for the SMEs? The capital market or the crowdfunding or the acquisition and merger or loan in the bank? Which one is the best, you think?
I think there's no, so it depends on the case, it depends on the industry, it depends on the stage of the business, it depends what the founder wants. I don't think it's one answer. Sometimes it's a mix. It really depends on the stage of the business, industry, and what the founder wants.
Thank you very much for this great speech, and thank you for you everybody, and see you in Japan next year, inshallah. Thank you.